Hello friends, welcome to my channel Financial Fitness with CA Ashima Abel Yunus. In this video, I'm going to explain what are double taxation avoidance agreements and the tax benefits that comes with it. As the world becomes more connected and globalized, it has become increasingly common for individuals and companies to conduct business across borders or work remotely. This also means they may have to pay taxes in multiple countries from where they earn their income. This can lead to double taxation. This is where double taxation avoidance agreements, referred to as DTAAs, come in. International double taxation refers to the taxation of foreign income in both the countries, one where the income is derived and the other where the investor resides. But before we begin, I would request you all to please subscribe to my YouTube channel. It's totally free. You can just log in on YouTube with your email ID and click on the subscribe icon. You can share it with your family and friends as well, so they can also benefit from it. I will just take a quick pause for 5 seconds so you all can take time to click on the subscribe icon, like icon and the bell icon that you will find below the video. Please do that while I wait. Okay, so now I'll quickly introduce myself for the new viewers. Here I am, CA Ashima, a professionally qualified chartered accountant and a certified auditor. I have worked as a partner and a director with one of the top 25 leading CA firms in India, which has also been a member firm of one of the big fours. After working in India for a period of 10 years, I moved to Sweden and have also worked as a senior financial consultant with a multinational and have catered to clients in Sweden, Finland, Norway, Denmark, and the United Kingdom. I have also worked as a freelance financial consultant and have been living in Sweden for the past 7 years. Okay, so now let's understand the concept of international taxation. It is a body of legal provision embedded in the tax laws of each country to cover the tax aspects of cross-border transactions. Global business has no border, but tax laws and rules will continue to have a clear border. International tax is a field where the taxing jurisdiction of two countries are involved. Tax is a sovereign issue, and every state has its right to tax its residents, but when there is taxing of the same property or person by two different states, then the conflict arises. The problem comes when there is an imposition of comparable taxes in two or more states on the same taxpayer and in respect of the same subject matter for identical period. Now let's understand what is Double Taxation Avoidance Agreement. DTAA, Double Taxation Avoidance Agreement, is a treaty signed by two countries. The agreement is signed to make a country an attractive destination as well as to enable NRIs to get relief from having to pay taxes multiple times. DTAA does not mean that the NRI can completely avoid taxes, but it does mean that the NRI can avoid paying higher taxes in both countries. DTAA also reduces the instances of tax evasion. The TTA agreements cover a range of income such as income from employment, business profits, dividends, interest, royalties, capital gains, among others. These agreements specify guidelines as to which country holds the right to impose taxes on particular types of incomes. Typically, the country where the income is generated retains the primary right to levy taxes on it, whereas the country of residency may also impose taxes at a lower rate. DTAA, which stands for Double Taxation Avoidance Agreements, applies only when the transaction is taxable both in India and in another country. Also, one party involved in the transaction should be a non-resident or a foreign company. Let's understand how to claim benefits of DTAA. If a person is a resident of India, they can claim the benefits of the DTAA by obtaining a tax residency certificate, which is referred to as the TRC. TRC serves as a proof of residence in India. On the contrary, if a person is a resident of another country, then the person can claim the benefits of the DTAA by obtaining a tax residence certificate of that country. TRC is a mandatory document to claim the benefits of the Double Taxation Avoidance Agreement. Let's understand what TRC is. A tax residency certificate is a certificate that is issued by the authorities of tax for the non-residents of that country, declaring that the non-resident is a resident for that particular year for DTAA applicability and is eligible for tax benefits of the tax treaty. I can give you my own example to explain what exactly TRC is. So when I was in India a couple of years ago during the pandemic, my stay in India exceeded 182 days and I was in India for more than 6 months and my residential status changed from NRI to resident for that particular financial year, because of which my global income became liable to tax in India as well. Even the income that I earned from Sweden as I was working from home. Now the tax on my income from Sweden was already deducted in Sweden, and I had to report that income in my ITR that I file in India as well. So now, in order to claim the benefit of DTAA and to avoid being doubly taxed, I obtained a TRC, a tax residence certificate from Sweden, which stated that my tax residence was Sweden for that particular period. But please note that TRC is required to be submitted with the Income Tax Department in India along with the proof of taxes paid or deducted in another country in order to claim the benefit of the foreign tax credit. So friends, this was part 1 of the series on DTAA, Double Taxation Avoidance Agreements. To know more about how one can claim DTAA benefits and what are the different ways of claiming benefits under DTAA, you can watch my next video, which will come up soon as part 2 of this series on Double Taxation Avoidance Agreements. You can also watch my other videos where I have shared information about tax benefits for returning NRIs like RNOR tax status and other tax benefits for NRIs on sale of a house property in India. And I have many other videos related to financial planning and investments which are not only relevant for NRIs but also for others as well. Now it's time to wrap up this video and I hope you all will benefit with the information shared in this video, and I also hope you like the contents of this video. I request you all to please do subscribe right now. You just need to log in with your email ID on YouTube to subscribe. That's it. It's totally free for all. So do it right now. Subscribe, like and share. Share it with your family and friends, and do share it in the WhatsApp groups in your phones as well. Thank you and bye-bye.